What is Bitcoin? A complete beginner-friendly guide to the world's first cryptocurrency by Doncryptozik. Bitcoin is one of the most transformative technological innovations of the 21st century. Since its launch in 2009, it has become the most recognized digital currency and a driving force behind the global cryptocurrency movement. Yet despite its popularity, many people still wonder, what is Bitcoin, how does it actually work, and why does it matter so much? This comprehensive guide explains Bitcoin in a clear, practical, and beginner-friendly way. You'll learn what Bitcoin is, why it was created, how it functions on a technical level, and why millions of people use it as both money and an investment. We'll also explore real-world examples, current trends, regulatory challenges, risks, and the future outlook of Bitcoin. Whether you're new to cryptocurrencies or looking to deepen your understanding, this article delivers a complete overview that is easy to follow yet professionally detailed. Keyword-optimized sections ensure clarity while supporting your SEO needs. Let's dive in. What is Bitcoin? The basics and why it matters. Bitcoin explained in simple terms. Featured snippet ready. Bitcoin is a decentralized digital currency that allows peer-to-peer transfers without banks or governments. It uses blockchain technology to secure transactions, verify ownership, and prevent double spending. Bitcoin operates 24/7 across a global network of computers. Why Bitcoin was created? Bitcoin was introduced by an anonymous figure using the pseudonym Satoshi Nakamoto. The idea was simple but revolutionary. Create digital money independent of banks, limit supply to mimic scarcity, like digital gold, enable fast, global, censorship-resistant payments. Key characteristics of Bitcoin: decentralized, no single authority controls it. Limited supply, only 21 million Bitcoins will ever exist. Borderless, can be sent anywhere in minutes. Transparent, transactions are recorded on a public ledger. Secure, protected by advanced cryptography. Bitcoin's importance extends beyond finance. It represents a shift toward technological empowerment, allowing people worldwide to control their own money without intermediaries. How Bitcoin works. Technical and practical breakdown. Understanding Bitcoin requires exploring both how it functions and why its design makes it unique. Blockchain technology. At the heart of Bitcoin is the blockchain, a distributed ledger that records all transactions. Each block contains transaction data, timestamps, a cryptographic link to the previous block. This makes the blockchain tamper-resistant and extremely secure. Mining and proof of work. Miners validate and secure the network by solving mathematical problems using computing power, a process called proof of work, POW. Why mining matters. Verifies transactions, protects the network from fraud, introduces new Bitcoins into circulation. To learn about how mining works with other cryptocurrencies, you can read related content such as How to Mine Ethereum here, https://bfray.com, How to Mine Ethereum and What Ethereum is a complete guide. Bitcoin wallets. To use Bitcoin, you need a wallet, which stores your private keys. Wallet types include hardware wallets, mobile wallets, desktop wallets, paper wallets. Private keys equals control of your Bitcoin. Lose them and you lose access. Bitcoin transactions explained. A Bitcoin transaction includes the sender's wallet address, recipient's wallet address, amount of Bitcoin sent, digital signature for authorization. Miners verify and add the transaction to the blockchain. Why Bitcoin is secure. Cryptographic signatures, decentralized nodes, consensus mechanism, POW, public ledger transparency. This combination makes Bitcoin one of the most secure financial systems ever created. Benefits and drawbacks of Bitcoin. Bitcoin offers powerful advantages, but it also comes with risks. Advantages of Bitcoin. 1. Decentralization. No government or bank can control Bitcoin, making it resistant to censorship and inflation. Global and borderless. Bitcoin allows anyone to send money across borders within minutes. 3. Low transaction fees. Compared to traditional banking and remittances, Bitcoin offers cheaper transfers, especially internationally. 4. Hedge against inflation. Many investors view Bitcoin as digital gold due to its fixed supply of 21 million coins. 5. Transparency. All Bitcoin transactions are publicly available on the blockchain. 6. Accessibility. Anyone with internet access can participate in the Bitcoin economy. Drawbacks of Bitcoin. 1. Price volatility. Bitcoin is known for dramatic price swings, making it risky for short-term traders. 2. Regulatory uncertainty. Governments worldwide are still developing rules for cryptocurrencies. 3. No recovery options. If you lose your private keys or send funds to the wrong address, there is no customer support. 4. Energy consumption. Mining requires significant energy, raising environmental concerns. 5. Limited merchant adoption. Thousands of companies accept Bitcoin, but it is still far from mainstream money. Current trends and real-world examples. Bitcoin continues to evolve, with new trends shaping its future. Institutional adoption. Companies and financial institutions like Tesla, MicroStrategy, PayPal, Fidelity have integrated Bitcoin into their investment strategies or services. Bitcoin ETFs. Bitcoin exchange-traded funds make investing easier, especially for traditional investors. Lightning Network. The Lightning Network is a Layer 2 scaling solution that enables instant transactions, extremely low fees, micropayments. Bitcoin in developing countries. In nations facing inflation or limited banking access, Bitcoin acts as an alternative currency, a store of value, a financial gateway. Investment and strategic perspectives. Bitcoin is commonly seen as both a currency and an investment asset. Bitcoin as a long-term investment. Many investors buy Bitcoin to hold for years, expecting its value to rise as adoption grows. This strategy is often referred to as hodling. Portfolio diversification. Bitcoin has low correlation with traditional assets like stocks, bonds, real estate. This makes it attractive in diversified portfolios. Trading Bitcoin. Traders use strategies such as day trading, swing trading, arbitrage, futures, and options. These strategies require risk management due to Bitcoin's volatility. Bitcoin versus altcoins. Bitcoin remains the dominant cryptocurrency, despite competition from thousands of altcoins. Risks, security, and regulation. Bitcoin's risks fall into several categories: technical, market, and regulatory. Security risks, exchange hacks, phishing attacks, poor private key management, malware targeting wallets. Best practices for safety. Use hardware wallets, enable two-factor authentication, avoid sharing seed phrases, store backups offline. Market risks. Bitcoin's price can swing dramatically due to news events, regulatory changes, market speculation, macroeconomic factors. Regulatory landscape. Regulation varies worldwide. Some countries adopt Bitcoin, for example, El Salvador. Others restrict or ban it. Most are forming clearer frameworks. Regulation is expected to increase, offering greater user protection, but possibly limiting anonymity. Future outlook. Where is Bitcoin heading? Increased institutional adoption. More companies and governments are exploring Bitcoin for treasury reserves, payment networks, financial infrastructure, technological improvements. Enhancements like Taproot and Lightning Network aim to boost privacy, scalability, smart contract functionality. Global use cases. Bitcoin may become increasingly important in inflation-prone economies, digital economies, international settlements. Long-term potential. Analysts predict Bitcoin could serve as global digital gold, reach wider mainstream adoption, influence the future of money. Conclusion. Bitcoin is far more than just a digital currency. It is a technological innovation that challenges traditional financial systems, empowers individuals, and offers new ways to store and transfer value. As cryptocurrencies continue to evolve, Bitcoin remains the foundation of this global movement. Understanding Bitcoin, its benefits, risks, and long-term potential gives you a significant advantage in navigating the world of digital finance. FAQ. Frequently asked questions. 1. What is Bitcoin in simple terms? Bitcoin is digital money that allows people to send and receive payments without needing a bank. 2. Is Bitcoin safe to use? Bitcoin is secure due to cryptography and decentralization, but users must protect their private keys. 3. Can I buy Bitcoin with a small amount of money? Yes, you can buy fractions of a Bitcoin, even as little as $5 or less. 4. Why does Bitcoin fluctuate in price? Bitcoin's price changes due to supply and demand, market sentiment, global events, and speculation. 5. Is Bitcoin legal? In most countries, Bitcoin is legal, though regulations vary. 6. How many Bitcoins exist? Only 21 million Bitcoins will ever be created. This fixed supply makes it scarce. Summary and call to action. Bitcoin continues to reshape how the world thinks about money, technology, and financial independence. Whether you're exploring it for investment, innovation, or curiosity, now is the perfect time to deepen your understanding. If you found this guide useful, share it, leave a comment, or subscribe for more cryptocurrency insights. Your engagement helps others discover high-quality crypto education.